It is episode number 29 of the Traders Podcast. I am your grateful and appreciative host, Jeremy Hritz, joining you here today after taking a week off last week, getting that family time in with the kids, my wife at Legoland, wrapping up the summer. Did a lot of fun things, and now I'm back to all of you. Things are starting to slow down as we creep closer to the start of the school year for the kids. And here we are. It is episode 29 of the Traders Podcast, and I'm excited today to be talking to you about what is the difference between small cap, mid cap, and large cap stocks. And you've probably been hearing this term thrown around recently about the rotation. And I'm going to talk about what it means when a rotation occurs in the market. Essentially, it's moving money out of one particular asset into another. And a lot of that is revolving around small caps. So we'll get into that discussion here today. And we will also take a look at Mr. Roku and see how he has been doing. I know we didn't look at him the last time we were together on episode 28, so we'll take a look at that. And instead of doing Ask a Trader this week, we're going to just do something a little different called What is Happening in the Market. So it's like As the World Turns kind of thing, a little news segment. What's happening? And I'll come up with a little title for it, but just trying something new here. As we build up some more questions, we'll put them in here for Ask a Trader, but let's just get caught up to date on what is happening in the markets. Check it out. All right, so what is happening? Well, we have had some significant selling that has happened over the last few weeks, and a 120-point drop on the S&P 500, the SPX, on Wednesday of this month of July. That would have been, I got to check my Garmin here, the 24th. So a big drop yesterday, and people panicking. Oh, the stock market's going to crash. It's coming down. And really the reason behind that drop is, there's a lot of uncertainty out there in the markets right now, with the presidential election coming up in November, and with Biden dropping out of the race, you have a new Democratic presidential candidate, an assassination attempt on the Republican candidate, Donald Trump. So uncertainty surrounding that. The market doesn't like uncertainty, and you're starting to see some of that get priced in. You have some geopolitical conflicts still occurring between Israel, Hamas, you have the war between Russia and Ukraine, all those things. And we're starting to see weakening in economic data across the board. Unemployment, we're seeing, is ticking up. We are seeing inflation come down, but there's just a host of factors that are really making the market skittish. And while I don't think this is any type of a crash, it's absolutely common and normal to have corrections, pullbacks. Go back and check out the video I did a few months back in April when we were going through a correction. We should see a bounce at some point, but the reason why we're seeing that is we have a lot of uncertainty that's occurring right now. But the big piece of information that this market is waiting on will arrive tomorrow, and this video might not be up until Friday, and that's PCE. And that's the Fed's preferred gauge of inflation. If that's going to come in cooler than expected, it puts the rate cuts on the table, almost a certainty for September. I'm on record for saying that I think the Fed will cut next week. It'll be a surprise cut. Remember, the FOMC meeting is next week, the 30th and 31st of July. Jerome Powell will speak on the 31st. And I think we get our first rate cut there, because Jerome Powell has said several times in his press conferences or in any of the many interviews he's been on that they're not going to wait for inflation to get to 2% before they're going to cut. And that if they see any uptick in the weakening of the labor market, they can cut. But he also talked about there being a fine balance of not cutting too late and not cutting too early. And I almost feel like it's a sweet spot right now to dial the rates back and to slowly unfold them as the rest of this year plays out. So keep an eye on that for next week. That's the 30th and 31st. On the 31st at 2 p.m., we'll get the rate announcement as far as what's going to happen. And then at 2:30 p.m., Jerome Powell will speak. So just keep that in mind. There's just some things that are happening in the markets. And then we've started a brand new earnings season. And just a reference to the videos I put out, one was about Netflix earnings. I thought that prior to earnings, it would have hit 700. That didn't happen. It definitely did not gap up on earnings. In fact, it dropped hard. It rebounded, salvaged what it gave up, and really hasn't been doing much since then. So the miss was in, and I had it dropping down to about 620. I think it may have gotten there today on the early drop before we had things get bought up a bit. So I'm 0 for 1 there. And then I posted about Tesla earnings, and I posted the bull and bear case, my bull case being $300 to $303. And that's what I was anticipating happening. And it didn't. It gapped down. And I said that if it was the bear case, it would get between 211 and 204. Didn't drop that low, got very close. Today it got bought back up. And that mother of all trend lines, it's currently below it. And you know, there was a miss with their report. And so Tesla will be back. The robo-taxi date was moved to October. And one thing unique that Musk said in the Tesla earnings call was that this is a company that's working to solve the autonomous driving problem, and that people who are just invested in Tesla as a car company should sell the stock because their goal is to solve autonomous driving. And so that hasn't been factored into that price yet. That's probably pushed out to the end of the year before we see the first robo-taxi. And then don't forget about the Optimus robot, which the company foresees everybody having, just like you have an iPhone, will have an Optimus robot in your house that could do chores, it could play the piano, all sorts of things. I know it sounds crazy. I was saying to someone not too long ago, if you think about it, the movie Terminator 2, Skynet and the robot army, you know, that's not far-fetched anymore. That's a reality. If you think about artificial intelligence, if you think of all these things happening with robotics. And so it's just crazy to see how fast technology moves in this era. And so more earnings next week. We're going to, and really in the weeks to come, you're going to have Apple reporting, Microsoft, Meta, NVIDIA. The chips have been struggling a lot. So that's going to have a big impact on what happens with the market. But we did have a bit of a pullback. Is it done? Is it over? We won't know. I think PCE will have a long way in determining where it's going to go. We'll just have to wait and find out. So that's what's happening in the markets. And hopefully you're walking away with some education there. And let's now talk about the difference between small caps, mid caps, and large caps. The hell's a cap? Check it out. All right, so I have had a few questions about the difference between a small cap company, a mid cap company, and a large cap company. And basically it comes down to valuation and really how much a company is worth. And that's really how this is established. And also too, there's a level of risk associated with small cap, mid cap, large cap. And we're going to talk about that so you can understand it, because right now what you're seeing in the market is a bit of a rotation from the large cap mega tech stocks, your Mag 7 stocks, into small cap stocks, your IWM Russell 2000. Okay. We'll talk about that here in a second, but I want to make sure that you guys understand the difference between these different stocks. Okay. So a small cap stock is going to be valued between 300 million and $2 billion. Okay. So it's valuation. All right. And so these are companies that are just starting out. They're growth companies, which means there's high risk, but also high reward if you get in on one of these companies and they just take off. All right. So again, small cap, 300 million to 2 billion, lots of risk involved, great opportunities. And right now we're seeing money move into these companies because they are very dependent on interest rates, because they have lots of debt. And that factors into their bottom line. When those interest rates come down, they're not putting out as much for their debt, which can increase their bottom line. And so as we're seeing those rate cuts become more of a reality, you're seeing small cap stocks pick up. You're seeing IWM. Go ahead and type that in on your trading view. That's the Russell Shares 2000. You're seeing that in a bit of an uptick. And Tom Lee of Fundstrat has said that we could see a 40% increase in IWM by the time summer's over. Now, that's significant. That would put it at $300. That's crazy. But we are seeing that rotation. And again, those are high risk growth stocks. Okay. 300 million to 2 billion. So that's a small cap. Now, mid cap, we're looking at between 2 billion and 10 billion, right? 2 billion, 10 billion. That's a lot of money, right? A billion is a lot, right? To call anything small that's 300 million to 2 billion. I mean, it's insane, right? Now, there's still risk involved with your mid cap, but they're more established than your small cap. There's still growth potential there. And it's kind of I guess, a Goldilocks in between your small and your large cap stocks, right? And so, if you don't want to take on that full risk of a small cap, you can invest in the mid cap. Again, that's 2 billion, between 2 billion and 10 billion. And then you have your large cap, your mega cap, your 10 billion and up. Okay, these are your big boys. These are your apples. I mean, you might even call them the mega tech or mega cap. Your Apples, your Microsofts, your Meta, your Tesla, your Nvidia, those types of companies. And while they might not have as much growth, they're reliable, they're consistent, they've been around, they're proven, they're established. Right? These are the stocks that I typically day trade, your large cap, your blue chippers. But you can kind of push back on, when you look at Nvidia, I mean, look at the growth that it's had, and it's a large cap stock. I mean, sometimes these stocks can increase in value, even though they're large caps, depending on what their impact on society is. And we all see what's happening with AI. And, it's pretty incredible what NVIDIA has been able to do in the past year. And so the reason why I wanted to talk about this is because big tech has been carrying this movement in the markets, this bullish move for quite some time. And right now what we're seeing is that money start to come out of your Metas, of your Microsofts, out of Apples. And we're seeing the QQQ, the technology index, we're seeing that start to drop. And we're seeing a correction there. And we're seeing the money rotate into these smaller cap stocks like your IWM, right? That's the ETF, the index for your small caps. And in order to understand that, again, because rates more than likely are going to be cut, knowing that, you can understand what's happening in the market, because people are willing to assume a little bit more risks, knowing that the rates are going to come down, knowing that these tech stocks have been pushed super high. Their valuations are super high. We're getting a nice pullback on that. And the money is rotating into these small cap stocks where there hasn't been a lot of movement in price action, right? And because these things are beat down, there's opportunities to really make some noise over the next few months. And so that's what we're seeing now. We're seeing the movement out of big tech into small caps, into IWMs. And now you could see, and now you understand what the difference is between all of those, right? And again, just to recap, small cap, 300 million to 2 billion, mid cap, 2 billion to 10 billion, and large cap, 10 billion and up. All right. Now you learned quite a lot today, right? You know what the small cap stocks are, the mid caps, large caps, and you understand the rotation And again, that rotation is all about where the greatest opportunity is. Right now, the market makers see it in small caps, and we'll see how that plays out over the next few months. But guess what time it is now? Oh, snap. Let's take a look at it's Mrs. Roku. Let's give some love to the ladies. We're gonna make Roku Mrs. Roku today. So let's see how Mrs. Roku or Miss Roku is doing today. Let's pull up Roku, and here we are. So Roku had this nice push higher. It got down here to this support area that I had marked as a support that couldn't break, and it went on a nice run. Went up $14, which is decent for Roku, but then you see it just got rejected here, right where it tried to make a push before. Tweezer tops, that's equal wicks, came in. That's a reversal signal, and after that, bam, this thing just got knocked down. So that 100 SMA on the weekly is a strong resistance. It hasn't had a close above there. I mean, you got to go back to February 20th of this year, so quite some time ago. And this thing is still just kind of hanging out, doing absolutely nothing. It's below the 50 simple moving average on the daily. This big beast of a candle came in yesterday, selling pressure, not good. We're below COVID lows. We got bought up a little bit today, but rejected off that 15. Look at all this bearish volume that came in yesterday. So it's not looking good for Roku. And we have earnings coming up here next Thursday. So August 1st, we'll see what's going to happen. I mean, the last few times this thing went higher the day of earnings, but then when it reported, it went down the next day. Then obviously, if you go back to February, it gapped down there. If you go back to October, it gapped up. And if we go back to last July, we had a move higher. So it's so hard to tell with this one. But what I will say is that it's not very encouraging when you did have a bullish move that it got rejected. And really, I would say this is do or die time for Roku, that if these earnings are bad, we're coming down and we're retesting these all-time lows. And I believe the all-time low is way down here, 1567. But the next stop would be, if it's bad earnings and a bad forecast, 38.05, $38. Then from there, you'd be watching 27. But not a good look for Roku here. So keep an eye on it. This thing has just been doing a whole bunch of nothing. And anytime it gives a little bit of hope, what does it do? It just falls down and drops. So that's a look at Mr. Roku. Like I said, earnings next Thursday, so be ready for that. And with that, that is going to do it for episode number 29 of the Traders Podcast. I appreciate all of you joining me here today for this episode. Please make sure that you like and subscribe to the channel, share with your family and friends, drop a comment down below. Let me know what you'd like to see covered in episode number 30. And I will see you back here next week for episode number 30. And I appreciate you guys, all your support. Have a phenomenal day and best of luck trading. PCE tomorrow is going to be a big day. Take care, everybody. We'll see you.